Thank you, Mr. Chairman. My question is, if it's often said that monetary policy has long and variable lags, how does continuing to buy assets now, even though it's at a slower pace, address the current inflation problem? Won't the impact of today's changes not really have any impact for 6 months or a year down the road on the current inflation problem? And aren't you actually lengthening that time by continuing to buy assets such that it could be not until the long and variable lag after you end purchases sometime in March that you'll start to have any impact on the inflation problem?
So on the first part of your question, which is why not stop purchasing now, I would just say this. We've learned that in dealing with balance sheet issues, we've learned that it's best to take a careful, sort of methodical approach to make adjustments. Markets can be sensitive to it, and we thought that this was a doubling of the speed. We're basically 2 meetings away now from finishing the taper, and we thought that was the appropriate way to go. So we announced it, and that's what will happen. The question of long and variable lags is an interesting one. That's Milton Friedman's famous statement, and I do think that in this world where where the global financial markets are connected together, financial conditions can change very quickly. And my own sense is that they get into financial conditions affect the economy fairly rapidly, longer than the traditional thought of a year or 18 months, shorter than that rather. But in addition, when we communicate about what we're going to do, the markets move immediately to that. So financial conditions are changing to reflect, the forecast that we made, and basically, which was, I think, fairly in line with what markets were expecting. But financial conditions don't wait to change until things actually happen. They change on the expectation of things happening. So I don't think it's a question of having to wait.
Can I just follow up in thinking about having to wait? Is it still the policy or the position of the committee that you will not raise rates until the taper is complete? Thank you.
Yes. The sense of that, of course, being that buying assets is adding accommodation and raising rates is removing accommodation. Since we're 2 meetings away from completing the taper, assuming things go as expected, I think if we wanted to lift off before then you would stop the taper potentially sooner. But it's not something I expect to happen. But I do not think it would be appropriate, and we don't find ourselves in a situation where we might have to raise rates while we're still purchasing assets.